Welcome, everyone. Today, we are looking at Topic 4 in your SS3 accounting series, Departmental Accounts. This is a very important and practical topic. Departmental accounts are prepared by businesses that have different departments. Each department is treated as a separate trading unit. This allows the business to determine the profitability of each department. This topic appears regularly in your final examinations. You must understand how to prepare departmental accounts and how to apportion expenses. Pay close attention. Let us begin. First, let me explain what departmental accounts are. Departmental accounts are accounts prepared for different departments of a business. Each department is treated as a separate trading unit. The departments sell different products or operate in different locations. The purpose of departmental accounts is to determine the profitability of each department. This allows management to identify which departments are performing well and which are not. Departmental accounts are prepared in addition to the overall final accounts. They provide detailed information for decision-making. Understanding departmental accounts is essential for advanced accounting. This is a key concept. Now let me explain the purpose of departmental accounts. Departmental accounts serve several important purposes. The first purpose is to determine profitability. They show the profit or loss of each department. The second purpose is to compare performance. They allow for comparison between departments. The third purpose is to control costs. They help to identify areas where costs can be reduced. The fourth purpose is to make decisions. They provide information for management. The fifth purpose is to assess efficiency. They show how efficiently each department is operating. The sixth purpose is to reward performance. They provide information for bonuses and incentives. Understanding the purpose of departmental accounts is essential for understanding why they are prepared. This is frequently tested. Now, let me explain the features of departmental accounts. Departmental accounts have several features. The first feature is that each department has its own trading account. The trading account shows the gross profit of the department. The second feature is that expenses are apportioned between departments. Expenses are shared based on a suitable basis. The third feature is that interdepartmental transfers are recorded. This is when goods are transferred from one department to another. The fourth feature is that a combined profit and loss account is prepared. This shows the overall profit of the business. The fifth feature is that a balance sheet is prepared. This shows the overall financial position. Understanding the features of departmental accounts is essential for preparing them. This is frequently tested. Now let me explain the basis of apportioning expenses. Expenses are apportioned between departments based on a suitable basis. The basis depends on the nature of the expense. Rent is apportioned based on floor space. Lighting is apportioned based on floor space, or the number of light points. Insurance is apportioned based on the value of assets. Depreciation is apportioned based on the value of assets. Salaries are apportioned based on the number of employees or the time spent. Advertising is apportioned based on sales. The basis of apportionment should be fair and reasonable. The basis should reflect the benefit received by each department. Understanding the basis of apportioning expenses is essential for preparing departmental accounts. This is frequently tested. Now let me explain the treatment of interdepartmental transfers. Interdepartmental transfers occur when one department transfers goods to another department. The goods are transferred at a transfer price. The transfer price can be cost price, cost plus profit, or market price. The transfer is recorded in the books of both departments. The department that transfers goods records a sale. The department that receives goods records a purchase. The transfer is eliminated in the combined accounts. The combined accounts show only external transactions. Understanding the treatment of interdepartmental transfers is essential for preparing departmental accounts. This is frequently tested. Now, let me explain the format of the departmental trading account. The departmental trading account has a debit side and a credit side. The debit side records the cost of goods sold. This includes opening inventory, purchases, and carriage inwards. The credit side records sales. The difference between the two sides is the gross profit. The gross profit is calculated for each department. The departmental trading account is prepared before the profit and loss account. The gross profit is transferred to the profit and loss account. Understanding the format of the departmental trading account is essential for preparing departmental accounts. This is a practical skill. Now, let me explain the format of the departmental profit and loss account. The departmental profit and loss account shows the net profit of each department. The gross profit is transferred from the trading account. The expenses are apportioned between departments. The expenses are deducted from the gross profit. The difference is the net profit. The net profit is calculated for each department. The departmental profit and loss account is prepared after the trading account. The net profit is transferred to the combined profit and loss account. Understanding the format of the departmental profit and loss account is essential for preparing departmental accounts. This is a practical skill. Now let me explain the difference between departmental accounts and branch accounts. Departmental accounts are prepared for different departments of a business. Branch accounts are prepared for different branches of a business. Departments are located in the same building. Branches are located in different locations. Departments operate under the same management. Branches may operate under different management. Departmental accounts are prepared for internal purposes. Branch accounts are prepared for external purposes. Understanding this difference is essential for understanding the different types of accounting. This is frequently tested. Now, let me explain the difference between departmental accounts and manufacturing accounts. Departmental accounts are prepared for different departments. Manufacturing accounts are prepared for manufacturing businesses. Departmental accounts show the profitability of each department. Manufacturing accounts show the cost of production. Departmental accounts are prepared by trading businesses. Manufacturing accounts are prepared by manufacturing businesses. Departmental accounts include apportioned expenses. Manufacturing accounts include factory overheads. Understanding this difference is essential for understanding the different types of accounting. This is frequently tested. Now, let me explain the advantages of departmental accounts. Departmental accounts have many advantages. The first advantage is profitability analysis. They show the profit of each department. The second advantage is performance evaluation. They allow for comparison between departments. The third advantage is cost control. They help to identify areas where costs can be reduced. The fourth advantage is decision-making. They provide information for management. The fifth advantage is efficiency assessment. They show how efficiently each department is operating. The sixth advantage is reward system. They provide information for bonuses and incentives. Understanding the advantages of departmental accounts is essential for understanding why they are prepared. This is frequently tested. Now let me explain the disadvantages of departmental accounts. Departmental accounts also have some disadvantages. The first disadvantage is complexity. They can be complex to prepare. The second disadvantage is cost. They cost money to prepare. The third disadvantage is time. They take time to prepare. The fourth disadvantage is apportionment. The apportionment of expenses can be arbitrary. The fifth disadvantage is interdepartmental transfers. The transfer pricing can be subjective. Understanding the disadvantages of departmental accounts is essential for a balanced view. This is a key concept. Now let me give you sample exam questions to prepare you for your test. What are departmental accounts? Departmental accounts are accounts prepared for different departments of a business. State the purpose of departmental accounts: to determine profitability, compare performance, control costs, make decisions, assess efficiency, and reward performance. What is the basis of apportioning expenses? The basis depends on the nature of the expense. Rent is based on floor space. Lighting is based on floor space. Salaries are based on the number of employees. Advertising is based on sales. What are interdepartmental transfers? Interdepartmental transfers occur when one department transfers goods to another department. What is the treatment of interdepartmental transfers? The transfer is recorded in the books of both departments. The transfer is eliminated in the combined accounts. Explain the difference between departmental accounts and branch accounts. Departmental accounts are for different departments in the same location. Branch accounts are for different branches in different locations. State the advantages of departmental accounts: profitability analysis, performance evaluation, cost control, decision-making, efficiency assessment, and reward system. Let me summarize everything we have covered today. Departmental accounts are prepared for different departments of a business. They show the profitability of each department. The purpose of departmental accounts is to determine profitability, compare performance, and control costs. Expenses are apportioned between departments based on a suitable basis. Interdepartmental transfers occur when one department transfers goods to another. The transfer is recorded in both departments and eliminated in the combined accounts. Departmental accounts have many advantages. They provide information for decision-making. Understanding departmental accounts is essential for accounting. This is topic 4 in your SS3 accounting series. Study it well. It appears regularly in your final examinations. Well done.